Thank you, Mr. Chairman. Secretary Geithner, in my opening statement, I asked you, or said that we really have been looking at option one on this side of the aisle. It seems that that's what taxpayers want. Would you work with our committee on option one to establish a clear framework, put in motion reforms that facilitate the private sector reentry?
Of course, we'll work with you. But again, I would be careful not to be too enthusiastic about that option, because you want to recognize that the consequences of that could be more concentration in the mortgage market, less level playing field for community banks, and in a crisis, you might face the risk that in the end, your only option is a model in the FHA where the taxpayer may be more exposed to losses. And although it seems like a more private option, that risk will be in the banking system, and what that means is there'll be a general implicit guarantee there the taxpayer doesn't get paid for, so there's risk in that option too. That's why you have to look at them a little bit more carefully, and I would caution you from being too enthusiastic about the stylized versions of even that more limited option, even if you want a market that's more private than public.
Well, I think it's a starting point, but I think you have, when you're talking about the FHA, there too has to work at there has to be work at the same time with the FHA to make sure that they all of the market goes right to FHA, and so this probably would be an increase in the costs for FHA as the premiums increase for Fannie and Freddie, and so that we get the private sector in there. But there seems to be then a contradiction between the regulators and HUD as far as how this is going to work, because or the administration seems to be saying we've got to reduce the role of FHA, but the regulators have, with this what seems to be the restrictive QRM that will limit the opportunity for borrowers, especially I think the first-time borrowers, and things like having a 20% down payment is really going to cause some problems.
Well, you made 2 points which are very important points. One is that you want you want Fannie and Freddie and FHA to move together as they try to phase out the government's role. That's important, and we're committed to that. They're going to commit to work together in that context. Because again, you don't want one moving, not the other moving, and the business just shifting to the other. But you're right, as you design these new rules of the game for risk retention for the private market, you also don't want to create a situation where you increase the incentives for the government to take on more of that role. You're right to emphasize that, and I think we can achieve that balance. But I think if you look forward in the private market, I think we should return, as an objective, return to a system where homeowners borrow less against the value of their house and have to put a higher down payment. That's a very important protection. It's not the only thing you need to look carefully at. It's not the only determinant of loss rates, but it probably leaves the country in a better position if there's a bigger cushion of equity in people's homes. It's their most valuable financial asset. People need to be able to move when they change jobs. If they can't move because they don't have the equity cushion, it's very damaging to the overall economy. It can be very damaging to other people in their community. And so I think for the broader market, we want to move to a situation where people put more equity down in their homes.
I ran into former Treasury Secretary Paulson a couple of weeks ago, and he mentioned GSEs and said, you've got to fix this, and what about being a public utility? And I don't think that was too popular, but that's another thing. Did you ever consider that as one of the
there are variants of option 3 which people describe as having a public utility feature. Again, I would say the following things are true. If the government's going to provide a guarantee through FHFA or alongside FHA, you want it to be explicit. You want the government to charge for the risk of loss. You want there to be private capital ahead of the public capital so that private investors absorb loss ahead of the taxpayer. And you want ultimately the taxpayer exposed to less risk of loss. So, but what you don't want to do is a system where there's this implicit guarantee or a guarantee that's not appropriately priced. Those are the things we have to avoid. But when people say the word utility, again, you could have versions of option 3 which would have that characteristic. You could avoid that characteristic in option 3. Depends on how you do it.
Okay, thank you. I yield back.
Thank you, Mr.